Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, it's here. We need to get ready for what's coming next. Let's dive in.
Trade Genius.
So Bob, tons of crazy headlines, right? Middle East conflict, port strike, but I think ultimately at the end of the day, what's really the biggest catalyst that we have to deal with, because I think it's a precursor to, what we already feel in parts of this country, and that is just a big recession that's long overdue.
Yeah, I mean, look, I think it's all over but the crying at this point. When they look at the unemployment rate, that's kind of a lagging indicator. But this chart I want to put up right now, Phil, is a precursor. And this is basically the job postings that are collapsing. And so you don't post jobs if you don't have jobs to post. I think this is even orders of magnitude worse because as we know that companies will post jobs even if they're not filling the jobs.
Right.
Because they're always looking to potentially create a bench in case somebody does leave or they have to let somebody go,
Right.
that they have people that they feel could do the job that they can get them into interviews very quickly. So I think this is really bad news. And then the chart, I'll let you speak to the chart that you put together, is that basically the truck is going downhill and there's no runaway truck ramp.
Yeah, this next chart here is the unemployment rate, which is that blue line that you see there. And I kind of highlighted each time, you get these rounded bottoms in unemployment before they start to shoot back up, right? So unemployment rate shooting back up is bad for the economy. And then you'll notice there's these green shaded areas around when that unemployment rate starts to shoot back up. Those are recessions from the Federal Reserve. That's their recession markers. And then on the bottom, you have just the standard relative strength indicator. And that's a good indicator to use on these big economic data points because they have very consistent readings over the years. And I highlighted down there whenever the RSI crosses up over the midline or the 50 line. And that's generally your trigger for, okay, the recession is coming. So we have all of those elements again. You can see every single recession has been preceded by a rounded bottom in an unemployment and the RSI crossing 50. So the only thing we don't have here, guys, is initial claims. We really and I think that's going to be a coincident indicator, meaning it's going to probably happen right as the powers that be that actually officially stamp the economy in a recession do so. And initial claims needs to climb a bit higher. So that's really the only thing that we have that isn't in recession territory. But if you look at manufacturing, the rate of change in the manufacturing numbers and new orders, those are all plummeting. If you look at personal interest payments, those are at extreme levels. If you look at house affordability, that's at extreme levels, negatively. And so we got a lot of things lining up here, but I thought this chart coupled with the job postings dying off makes a lot of sense that this train that's coming isn't going to stop and we're going to be in recessionville here pretty quick.
Yeah, and you could see it in the WARN reports too, the WARN report, and Samsung worldwide massive layoffs. I mean, so the big companies have a lot more durability than small companies to weather this stuff, and they're bailing out. And so I just think the cake is baked here,
Right.
and I think it's going to get pretty ugly. And I think if we have a change in administration, I don't think they're going to be in a big hurry to fix it because they want to have the problem out there before they take power, so they can blame the last administration. So I think Main Street's going to suffer here, Phil. Now, hey, one thing too, just as an aside, it looks like there's maybe a support here for a short-term bounce in Bitcoin. And energy's been doing what we've been telling people it's going to be doing. People are making a lot of money on this energy trade right now. They're squeezing the shorts, and Israel's playing rope-a-dope, so they're not giving a sell the news event by bombing anything. So I think that trade may last to next Monday or Tuesday, and I think Bitcoin may get a rebound here too if nothing happens here over, I think, is it Yom Kippur this weekend. So keep an eye on that. So we may get a rotation back into Bitcoin, maybe back out of oil next week. But the oil trade has been just bueno for us this week, Phil.
Yeah. So guys, let us know if you think the recession is avoidable at this point or unavoidable. Love to hear your thoughts in the comment section below. As always, thanks for watching. And if you need help navigating these markets, check out our specials at tradegenius.co. Thanks, guys. We'll see you on the next episode. Take care.
Trade Genius.